Good afternoon, guys. What's going on? So, yes, yesterday we had FOMC. We saw some interesting price action intraday. We talked about it. We're going to get some volatility. We had again, from our angle, a pretty expected response from the Fed on the idea of bringing back interest rates sooner than expected. That was priced into the market again via banks being up over the last 7 months here, and the market responded in the way that we sort of had talked about. We're going to go bid because this process is going to take a long time, and it's going to take a longer time than it would take to actually affect the market in the short term here. And so we don't really have exposure to what's coming in 2022, 2023 here. And if we put the pieces together here of what we've been talking about, we've had this shift back to buying into growth, specifically through mega caps and big names, which is what we've been buying nonstop for the last month now, right? We're trying to take this value centric portfolio that we've had since the sort of election, and we've now started to put more risk on in the last month or so here, right? We've been very aggressive buying on every single dip, buying nonstop, specifically again through our mega caps, trying to really lead sort of the move out. Today is easily the most clear day we've had so far that shows the risk on mentality in the market right now. People, traders, the day traders, the meme traders, investors everywhere have now started to rotate back into growth, taking profit on some of the slower moving positions that, again, we gained 55% just from this year on energy already, gained 55%. And so when we looked just a couple weeks ago at that graphic of comparing, NASDAQ was only, 8% gain so far on the year, and now we're putting points on, right? And that again, that's how we work with trading, right? We want to be we want to bring money home, and we want to be buying things that are going to be growing here into the future. We are in I don't even know what you want to call it. We're just in this trend that can't be stopped. There's nothing that can stop it. If we look at the S&P, we're at the bottom of this trend in the channel. This did not tell you really the full story of the day, I would say. You really have to look through the NASDAQ. This is again is being sort of brought down a little bit from those sectors I just mentioned with energy banks. They obviously came down to quite a bit. We'll talk about a little bit. But this is very bullish in terms of the move we're on. We've gone through CPI numbers, right? CPI numbers, again, the candle over here, which were higher than since like 1992, 5% inflation. That should, to the contrarian, say, well, that's going to stop the market from appreciating. We just had the Fed come out and have a little bit more of a hawkish response, something that was expected. The market is still going bid today, buying the exact opposite of what would be the negative, right? Technically, if what they're saying is true in the data, then growth would be being discounted. That's not happening because the reality is that's not how markets work. We're not going to price something in when there's the real pricing is coming from inflows that continue to rise. I posted into just the channel in the last 5 quarters. In the last 5 quarters, we have had $1 trillion worth of inflow, which is more. So that $1 trillion in the last 5 quarters is more than the last 10 years combined of inflows. We brought this up last year that we were approaching that mark, and now we've actually done that. More inflows than in the last 10 years, in the last 5 quarters. So a little over a year. That's insane. And it continues here, right? We're buying every low. And we've talked about this. This is the only thing to buy right now is equities. And all we do is rotate from one thing to the next. So why were we in value before? Because this is what was growing in the moment, right? From the presidential election, this was the place to be because growth, again, was going through this sort of growing pain. Because why? It put a ton of points on during 2020 from COVID. And what didn't? Value didn't. Value got fucked up. And so we've rotated back and forth. And now today we're really seeing, again, we're really seeing it come through. And which is why I talked about how happy I was about us holding through on our mega cap positions. You know, thinking about the way in which we continue to buy on these lows and continue to say that, listen, inflation's going to be good for the market, and kind of just using a little bit of a bias to ignore some of the price action. And we got fucking paid for it. To be honest with you, we got paid for it for turning up the aggressiveness. Not even in the fact that we had mega caps for just sort of building a portfolio of mega caps. We then, in the last couple of weeks here, have got very aggressive, looking for short-term plays. You can look at it as a meme or anything you want. But for instance, even just looking at something like AMD here, you know how much those options were up? Over 1,000%. Did we do anything special? We didn't. We just decided to stop being this sort of. It's not that we were being risk off, but we were only looking for long term. We put a short term position that expires this week, and it made 1,000%. That's not too bad. And this is one of many positions that we've seen not only this week but from the last week as well, right? Mega caps still being the most important, but I do want to sort of emphasize how some of these, positions, they have now come into the short term, and we did get this idea of a gamma move this week, and you have to put it into sort of this view that we have had 2 consecutive weeks of important economic sort of events, and it didn't do anything. It didn't stop anything. It presented more volatility, which was good for us. That's exactly what we wanted. Our bets were that what was going to happen was that this event would give us more volatility, actually allowing us to make more money from it, which it did. If you were in any options positions this week, that's exactly what happened. This entire week was just all-time high moves, right? S&P obviously pulled back a little bit more, but we've been all-time highs pushing. And if we are going to go bid like this the day after FOMC, what do you think is actually going to what's going to happen? Do you think it's now just all going to stop? This was it. We bought everything. That's not how it works, right? That's not it. And so I think we're right in the right spot. I think yesterday might have scared some people. Some of you guys asked more questions than usual. Like, are we sure? Are we sure this is okay, right? And that's why we went into it and said we're going to hold and buy any dip, and we're not going to use this sort of we're going to change our minds because of 4 intraday candles, right? 15-minute. We're not going to do that. That's not how these things work. And the market proved the point today. I think mega caps really putting points on. There's pricing in of buybacks still. So that chart I also posted shows the buybacks in relation. Buybacks are picking back up, and there's scheduled to be $400 billion worth of buybacks upcoming here that are already on sort of, again, if you're doing buybacks, you can put it out that you're doing it. We have 400 billion of buybacks upcoming. That's a lot of buybacks. So that is coming. So there is pricing for that. If you remember about a little bit about a month ago, we were really talking about this a lot, that we were looking for any lows to be sort of supplemented with buybacks. Google is the easiest example to use. Looking at Google, it's very easy to find the buyback candles in here when these things are happening. But this is the place that we're in. And I'm really happy with the way in which sort of picked up the attitude. It's not easy to go from one thing to the other. And so the growth trade has done very well. It was, again, it was pretty bearish before, right? It was pretty bearish. It wasn't very good. And the problem was even if it wasn't bearish per se, it was difficult to figure out timing, right? And that's why we didn't want to be in growth during all this time, right? We understood that was not the place. And so if we look over here at banks and energy, let's talk about this a little bit. This has been our this has been our long trade for a long time here. If we look at sort of what happened in today, I would normally we would be talking about this candle we would be buying on. And we actually had mentioned it a few times here this week that if we were getting this, we'd be buying it. This is a trade that I'm going to wait for tomorrow to put back on if it's going to happen, because when we think about opportunity cost, There's a reason why the market's taking profit on this here and putting it into growth, because growth has a lot more points to put on right now. It has a lot of points to catch up. We've talked about the Apple and Amazon dynamic of how they're still about 10% away from their all-time high. I'd rather go get that 10% right now, wouldn't you? And that's why we've been putting short-term sort of aggressive plays on. This here, we've been sort of dwindling down the size of the large position, making room for the growth play. This is not an answer yet. That again, this is fully rotation, fully take profit to go into growth. This is not an answer of how much. Momskid asked a question earlier. Again, what happened yesterday with what we heard for data, and again, it's just they were reiterating what we saw with the inflation data already, is that we're bringing interest rates back sooner than later. That's good for banks. That is 100% good for banks. So why did banks sell today, the day after we had the info? And they did, decent enough yesterday because, again, it was good for them. It's because we had speculated for months now that was the case. So this is not normal bank movement, right? This was a rally through banks that we've been putting on. And this is not sort of the average. And this is what we do leading into a speculative event, is that we're betting that something's going to happen, and then we get confirmation that's going to happen, so you take profit on it, because this is the entire gain, right? This was the entire point. That does not mean it's going to stop, which is why this candle here doesn't matter in the overall trend. It matters in terms of the flows of right now, which is, again, a rotation to growth. So you can easily look at this chart and say, oh, okay, that's the rotation into growth today, right? The question is how much, because this is still going to be a benchmark position for us. It's going to be important for us. There's still plenty of points here to be made on energy, and then on banks. There's still plenty of points to be made here. It's going to continue to grow. We've talked about this plenty. The question is, what does this consolidation look like here? I don't think you're going to get as vigorous buying here as you do see in growth right now, right? People are not going to be buying banks in the same way. These positions take time to develop, and no one sold long positions, right? This is more, again, of a near-term situation, putting it into growth. So this we're going to wait to see tomorrow. It's going to be important to see. In terms of, I would say, portfolio sizing, I've talked about this. We went from, this 90% value, 10% growth sort of idea for about a month. We've been sort of picking away at that, putting more into growth. I said the start of this week, we talked about when a position you put on ends up growing, right? Let's say for mega caps, for instance, right? 10% was in mega caps. Now that 10% is about 30. 30% is a lot more than 10%. And so, again, this dynamic changes as again, a position rises. And so when we look at this over here, right, just I'm going to use Amazon example because this rallies here. This has really changed the size of my position and its impact to my overall portfolio. This is one of the hardest things to do in terms of risk management, is to understand, well, how exactly do I change up this ratio now? You don't want to be taking profit here, right, to put it back to what you think. You have to let it sort of develop on its own. I think that's what you see with those take profits on bank and energy, is that these positions have been being put on. Those that sort of took the angle we took obviously have been very successful, but that is a larger position now, maybe even 50% in some regards, most likely. And so what exactly do you do when your ratio is changing so much? You make a decision, right? And the decision right now is to make the money right now. That's always what it is. And so if this is presented in front of you, what are you going to buy? Are you going to buy a chart that looks like this here? Or are you going to buy a chart that looks like this here? It always comes back to how a trade is made. If you look at it through the lens of trading, where's the entry? Where's the exit? Is there a trade here? Mega caps were flat for 7 months. The S&P 500 has not lost more than 5%. More than 5% in 7 months. There has not been a 5% loss in the S&P in 7 months. There hasn't been a 10% correction in quite a bit of time as well, right? Much longer than that, of course. And so, again, every single dip is being bought. This here, even this here, is not enough to affect that sort of point, right? Again, you had a break-even day on the S&P, but again, it doesn't really emphasize it. And so even in that area, we're going to continue to buy because we're buying everything. But we do want to make sure that we're positioned with sort of the way in which the wind's blowing. And that's why we changed our attitude from this, okay, we can only buy 3-month out options, which was sort of our calling for like 4 or 5 months there. And now in the last month, we've gotten a lot more aggressive short term, and you're getting paid for it, right? I don't want to go through too many tickers. Meme stocks had another nice day. Clean energy had a nice day today, bouncing back. This again is tied to semiconductors, and so we've been very hot on semiconductors recently. Most names again are tech heavy. Those that have name recognition did very well today. Shop did well. We've been talking about this chart a lot. Again, these are COVID. Some of these are COVID winners, but it's important to again separate the difference between some of these. It's not those in which, when we talk about things like Etsy here, it's not like an Etsy here that was purely a COVID winner, right? And we've talked about how these charts are different and how these are wait and sees, which is why we have not put positions on like this. And we'll always take those other trades over it. It's important to, again, note the difference. So something like Docu that we've been a part of since this momentum day came through, understanding those differences and continuing those aggressive moves there is important. And then, again, using our sector-heavy sort of strategy of, okay, semiconductors are good, and then we look for areas in which we can make plays. NVIDIA is our long-term sort of semi here that we've been a part of, right? This is a different trade compared to the AMD trade that we just did, which was this chart is dog shit. And all we're doing is betting that the sector goes up and that gamma events were going to happen this week. And so we put a weekly position on, right? Nothing from our other positions held us back from doing this, and it's important to then not use this as an example to go do it somewhere else by just making up stories, right? We have to understand that it depends in every situation. This was very different, and that's really where we are. And so again, it's about playing the game right now and being aggressive, seeing as much as possible. Again, the beginning of this week and even last week, I was taking days just to trade all day. That's really where we are because there's so much money to be made out there, I would say. And it's going to continue. I want to emphasize that it's so important. And I've been saying it every day. It's so important not to look at where we are and when we go through highs. And again, we've been going through highs for months now. Overall, different indices, the Dow, and now then the S&P, and now the NASDAQ. And it doesn't matter that it rotated, but it's important not to look at it as, well, I don't know, we're at a pretty high point here. That might be the end. That's the exact opposite to the reality of the situation, right? If people are buying up here and we're willing to continue to add more and sell bonds and sell slower moving positions to gain to gain a position in something that is moving, that is very bullish for the upside. And again, everything that we've seen in terms of the economy and the idea of inflation points to equities continuing to go up. And it's not going to be until 2022 that the data changes. That's the reality. Everyone knows it. It's going to be 2022 to actually see something change with inflation, whether it's transitory or not. And so all we can do is continue doing what we've been doing, and that's being buyers, right? And how do we go from being, how do you keep buying if you don't have the money? Well, we transition. We take profit, and we then need to make a decision to put the position back on, right? And when we have that question prompted to us, right? Like, okay, I need to take profit on this position. Now, where am I going to put this money? It's, again, two questions. Is it, do I put it back into this position, or is there something out there that's better than this one that I have currently, or that I could put currently on? That being asked every single time is sort of the entire game right now. And so we are seeing further rotations. We went from growth to value, back to growth now. It's going to continue to happen. And again, in individual sectors, we continue to do it as well. Okay, semiconductors are off. Now semiconductors are on. The important part of trading options right now is to have this revolving portfolio. And I talk about this a lot of, again, I try to capture as many things as possible, right? You cast a wide net, you're going to capture more profit. And if you're looking at more and are aware of more, you're going to capture more as well. It's also, when you're doing that, you're turning into this revolving portfolio that every single week or so you have new things that you need to transition. That's just the reality of playing with options, right? Things are going to get towards expiration, and they're not always going to be at the same time. And so always having cash sort of coming through to be able to put a new position on allows you to do this, right? If you're fully positioned, then in long-term positions, then this week you probably didn't have any cash to go put on risky positions. So then it's like, well, you know what? Maybe some of you here were like, okay, I'm happy with my positions. They've been working very well, and you didn't really want to take profit on them. So you said, okay, you guys go and have some fun with the risk, right? But again, here, we changed up this sort of tone because we want to take advantage of right now. There has to be a point at which there is something that clicks and says, okay, I'm going to take some of this profit so that I do have cash so that I can take advantage, right? We talk about taking advantage of moments. This was probably a harder moment to understand, to take advantage of. And again, looking at the average, it may not even look that special, but that's why I'm trying to use the mega cap tickers as the example, is that we took a moment, took advantage of the moment buying on the low, right? And again, we've done this plenty of times, but just buying on the low, we understood a transition. But then buying at a high is very different, right? And I think Spoon made the comment of, buying at a high, it has to go higher. That's a different sort of idea than buying at a low and selling high. We're buying high and selling higher. It is a different feeling, and it does seem strange to do, right? Just as much as it feels strange to take profit when you're going through highs. But again, there's things out there that are going to pay a lot more, and that change of mentality is really what those traders that made the most money this week so far have done, right? And that's why I'm obviously pretty chipper and happy about sort of things we've done. And when I think about this trade here and some of these trades that have come out of the low, and this is a lot of points, guys, right? It's a lot of points, and from an options perspective, none of this was being speculated on, right? None of it was there, and so we've raised sort of the bar, and it's now the points that come from here and further that are really going to gain. If you're not in position for that, then you're just watching, right? And that's scary to me right now. Again, being in cash is scary. No one's doing it. Everyone's in a position, but still, it's important not to use FOMO as the reason. But right now, you have to be involved, and I think we are seeing this shift to having to be a little bit more aggressive as well, right? And so we'll see what it looks like tomorrow. I think going over the weekend will be really interesting. We're going to have the sort of the fight between taking profit before the weekend, because some people really made a ton of money this week. Specifically, those that are probably on the retail side. I think when we think of myself and some of the retail traders that are probably out there right now, making quite a bit. Again, even if it's a meme stock, I would have to speculate that there's some people out there right now questioning whether they're going to take profit tomorrow. So that's one thing that could possibly happen. How much, though? How much does that affect, right? And then how much do institutions want to go buy any of that liquidity, right? And so we could have a very big day again tomorrow, which I would say we're going to continue on the trend. So it's not always going to be a straight line. You're going to have swings up, swings down through this trend to the upside, right? I think the S&P is the easiest thing to look as an example, right? You're going to have this movement like this. These lows here are great to buy on. You don't really have the area to go buy at a low right now, though, do you? The average may show this, but go find me something that you can go buy in a low. So again, we're specifically buying things that are going through the high, and we'll have to see. And so I do think tomorrow it might look a little strange. I think S&P continues to go to the upside, but again, it's coming off of a low. So these things are revolving. They're moving all the time. The thing is that everyone's risk on. Everyone's buying. FOMC's behind us. Inflation, everyone's just sort of agreed upon it, what's going on. Don't let different opinions creep in that apparently maybe you need to be anxious or anything like that. The second you lose your cool and the moment you stop being aggressive and buying and think like, okay, this is enough or anything, like it's going to change the way in which you're operating, and you're going to stop taking advantage of pullbacks that happen, dips that happen, right? The dips that happen on charts going through all-time highs are the best things to buy on, not the pullback bottom fishes, right, that have been going down for 30%. You don't want that shit there. You want to be buying the things that are through the high that pull back, maybe look like this, right? And so using a weekly perspective is still going to be important. So we'll continue with it. We'll keep being aggressive, but I'm pretty damn happy, guys. I think things are interesting. Obviously, banks and energy had a very interesting day. Had to deal with that pretty quickly, but otherwise, growth being on, risk on. I think we can thank the meme traders a little bit. I think we can thank them a little bit for getting us going. I think we'll look back and see that this might have started a little bit of the growth move for us. Otherwise, maybe it would have taken a little bit longer to get mega caps going, for instance. So I think this might be around to stay a little bit longer than most people are thinking as well. So maybe we'll talk about that a little bit tomorrow as well. If this has a nice day, breaks out of this, maybe puts a high on. So great stuff, guys. I will see you guys in the morning. Enjoy your afternoon, evening, night, wherever you are. Until then.